32 ounces. That is how much gold 1 Bitcoin could buy you 6 months ago. Today, about 15, not because something went wrong, because everything went right, and that is the part that should concern you. In October 2025, Bitcoin hit an all-time high just above $126,000. Gold at the time was sitting around $3,900 an ounce. Do the math. 1 Bitcoin, 32 ounces of gold. You could hold a small brick of the oldest money on Earth in exchange for a string of code that took 17 years to reach that moment. And look, this is not investment advice. I am not a financial advisor. I found some numbers that do not sit right, and I need to walk through them out loud. Since that peak, Bitcoin dropped to around 69,000, a 45% haircut. Brutal, but crypto downturns are not new. We have seen 80, 90% before. That is not the story. The story is what gold did in the exact same window. Some of you already checked this ratio before clicking. Others are hearing it for the first time. I am curious which group you are in. Gold climbed from 3,900 to roughly 4,600. Quietly, no headlines, no laser eyes, no executive orders. Gold just sat in a vault somewhere and got heavier. 1 Bitcoin now buys you about 15 ounces instead of 32. The purchasing power of Bitcoin, measured against the one asset it was built to compete with, got cut in half in 6 months. And here is what makes this different from every other downturn. This time, crypto had everything working in its favor. All of it. The SEC stopped fighting. 16 major cryptocurrencies got classified as digital commodities just weeks ago. The Genius Act gave stablecoins a legal framework. BlackRock launched Bitcoin ETFs that pulled in $25 billion in a single year. And the United States government, the actual federal government, signed an executive order to create a strategic Bitcoin reserve. They are holding seized Bitcoin as a national asset. Every single thing that crypto advocates spent a decade saying would send prices to the moon actually happened. ETFs, government adoption, regulatory clarity, institutional backing, all of it. Check every box. And gold, which did nothing, which changed nothing, which just existed the way it has for 5,000 years, outperformed Bitcoin so dramatically that the comparison is hard to explain away. This is the number nobody in the crypto space wants you to stare at, not the price chart, the ratio. Because the price chart lets you say it will bounce back. The ratio tells you something harder to dismiss. It tells you that when the entire American financial establishment lined up behind Bitcoin, the market responded by saying we would still rather have the Roth. Now maybe this reverses, maybe Bitcoin goes back to 120,000 and gold flattens out, and a year from now, this comparison looks foolish. That is possible. Crypto has made fools out of people calling its death before. But the question you should be asking yourself is not whether Bitcoin's price recovers. It is whether the story recovers. That assumption depends on another assumption. And this one is harder to test because every previous bounce had a narrative behind it. A next thing to wait for: the halving, the ETF, the regulation change, the institutional adoption. Those were the gates, and every one of them was supposed to unleash the next wave. There is one condition that would need to change for this to reverse, and nobody is talking about what that condition is. Those gates are all open now. There is nothing left to wait for. And on the other side of every one of them, gold, boring, silent, 5,000-year-old gold, is sitting there, worth more per ounce than it has ever been in human history. Bitcoin did not lose a battle. It won every battle, and then it got outrun by a rock. Next time you open your portfolio app, do not check the Bitcoin price. Check the ratio. 1 Bitcoin divided by the price of 1 ounce of gold. Write that number down. Check it again in 3 months. If your ratio is above 20, below 15, or somewhere in between, that single number frames everything else. That number will tell you more about the relationship between these two assets than any chart, any tweet, or any executive order ever could.